Hi, welcome to the Market Alert for Wednesday, the 3rd of August 2022. So Pelosi's plane and Powell's prompt more market mayhem. That was yesterday. So Pelosi has actually gone to Taiwan. Unbelievable, isn't it? Stock hit on US-China tensions as hawkish Fed speak again. And also further more of this hawkish Fed speak slams stocks into the red. So the Fed are now pivoting to going back to being hawkish with rates. So we'll just have to see how this pans out. But the market was up quite well considering. I mean, it was some good trades on the short side, but it kept coming back. There was no way it was going down yesterday. It just kept bouncing like a rubber ball. Spanish services today at 8:15. OPEC meeting all day. The only one to look at is the 3 p.m. ISM services. They're out, say 3 p.m. and forecast at 53.5, 55.3. So if it does come out anywhere near, it will show that the rate increases are supposed to be taking effect. We'll just again have to wait and see, but that's what they're looking for, is a reduction there. That'll be bullish for the market. Normally it would be negative, but it will be bullish because they don't want to increase rates. The whole thing's flipped from what it used to be. When you read in here, actual greater than forecast is good for currency. Not on this, not now. Not now. We're in a rates rising environment because the market, as it's survived and thrived on financial heroin since 2008, wants more of it, and that isn't available at the moment. So it's the opposite. So if anything, there's any hint that rates are not going to be increased and actually cut, then that will bring, like I say, the financial heroin or methadone back to the markets, and that's what they're looking for. So a drop is actually good news, whereas it used to be bad news. So there you go. Just keep that in mind as well. If you're wondering why the market's doing the opposite with the economic news items when they should be going down and they're going up, that's the reason why. Gold-silver ratio is still moving back to the upside, having a bit of a bounce at the moment. We'll look at that in more detail when we get to the markets, which we should do now. So let's have a look at the Dow. And in the daily chart for the Dow, you can see yesterday that we had a bit of weakness. The market down, continuing to move down later on in the evening, holding quite well in the afternoon, but as soon as there was news of Pelosi's aeroplane having landed in Taiwan and Chinese military doing some sort of test, it brought a bit of weakness to the market. But you can see that because nothing's happened overnight, the market has found support and is now trading back above the 38% retracement and heading back towards that 5-bar moving average. So what we're looking for here is the sort of upside targets, and in particular the 89 and 78 level will be crucial because that gives you that normal sort of corrective rally for the market to then reverse and move the other way. 30-minute chart, we started off by moving to the downside. We managed to get back above the 200 MA in the 30-minute chart, and the low obviously was giving the market some grief yesterday. Market trading down to this quite early, going through in the morning and then coming back and trying to stay above it, but then failing and then making its way down. But overnight you can see that the low has already been retested and is now moving back towards the DP and the 200 MA and the 50 EMA as well. Green at the moment and above the close and the 5-bar moving average, but the 20 is in the right direction as well, below the 5 there, which is what you want to see. In the German DAX, a lot stronger, didn't close below the 5-bar moving average as the price bar remains green. Traded down to 38 and the 50 EMA that we spoke about in yesterday morning's market alert. Price is now starting to move back to the upside, and again, just like in the Dow, from the high to yesterday's low, these will be the sort of targets that you're looking at on the upside. Already through the 38, so we can remove this, and 50 as well. and then it gives you the 3 remaining ones up to the 89% retracement there. Just get rid of this one there that comes from the other side of the chart. In fact, it's worth keeping that one, even despite the fact that I've just deleted it, because it ties in with these two here, 89 and 78, in the shorter term as well. So keep an eye on those prices, anywhere between 13.5 and 13,545 for some sort of resistance should the market continue to move to the upside. Yesterday, the market tried its best to hold on the low initially, but then fell through, but kept attempting to come back and eventually found support at the S2 and the 200 MA, oversold with demand, then the crossover bringing the market back, and then just drifting down a lot less slower than the Dow in the evening session, before then finding support once more at the 200 MA with demand, and then moving back to the upside, and currently above the close and the DP for the German DAX there. So in the 30-minute chart, we're drawing in some fibs here. See, we're at 62% retracement at the moment. Nothing kicks off with China and Taiwan, then it's a case of just getting back to the long side, because the market doesn't want to go down at the moment. I'm sure it will before long, but at the moment it doesn't want to go down, as we can see. The 5 minutes for yesterday, you can see the market kicking off there in the cash markets, selling off and then moving back, and then you've got your retracement there all the way back down, and inside of there you've got your retracement back up there, sideways, and then into the afternoon with the Dow, which you can see there was choppy before the market moved to the upside. Then overnight or early evening and into the night, you can see how the market pulled back, but since starting to move quite strongly to the upside there, coming off the DP, which you can see there, and heading back towards yesterday's high, which will be crucial. It's not that far away either. It's just around 50 points. It's around 50 points, I think, from what I can see there. Yeah, it's in that sort of region. So yeah, the DAX showing quite a bit of strength there, to be honest with you. And trading this week, and what I want to touch on is Friday, because I forgot to mention this yesterday. In the alert, you can see there it wasn't so rosy. I was messing around trying something, and that's why you should always stick to your plan. And the market did the opposite of what I was trying to do, obviously to make a profit. So not to worry, you can see there 64 to 36 loss win ratio on that one, and you can see that the loss was minus 141 in profits there, consecutive losses as well, 6 whatever. And so I thought, well, this isn't going to work, and I'm always looking at ways to improve things, but there's no need to do this, is the conclusion that I came to over the weekend. And you see they're down 270.75, but yesterday all back. Monday, Tuesday profits all back 605, and more like 85% winner to 15% sticking to the rules makes a big difference. And then in the long term, you'll see nothing's changed. We've still got a nice yield curve moving to the upside there, nice and steady to the upside. And that goes to show, and the reason why it still hasn't made an impact despite the fact of being minus 270 is because it's just over 1% of what is available in equity. Sorry, in the balance. It's actually less. I'm looking at the wrong one there. That's the margin. Is less than 1% of the account value. So that's why in the long term it makes no difference. You don't get any big drawdowns if you keep the risk, very, very small. And that goes to prove it there, as you can see with the long-term equity curve from the 19th of January. In the S&P, like the DAX, not closing below the 5-bar moving average, although trading down to it and reversing overnight, keeping a nice trend intact here at the moment in the 30-minute chart. you can see how the S&P was a lot different than the Dow, moved higher, but then came straight back down. So it held when the Dow was doing this sort of corrective move, and then the S&P just moved back down and did an 89% down to here to the 200 MA, and also you've got divergence that's going to be seen there and starting to move higher. Needs to close above the DP, and you've got the high there to get the market through as well. In the FTSE, sideways, closing below the 5 bar, finding support at the 200 MA, which is also 62% retracement, which we looked at yesterday. Just like the rest of these markets, let me just move this over a bit so you can see, and make this a bit bigger. And from the high down to yesterday's low, which is more or less the same. These are the upside targets. Watch the 78, 89 levels for some sort of selling should the market move higher. Close below or trade below the 200 MA in the daily chart will also see prices move low, which also includes that 62% retracement there as well. 30-minute chart, a bit choppy, market up, then retracing quite nicely, up, retracing quite nicely, retracing quite nicely, and then following through to the downside. So all of these are fib retracement lines. If not, they will be double tops or double bottoms as well. But all the rest you can see down here, up here, back here to a double top, back down from here to here. Then you've got 62% retracement. This one breaches it over 100%, and the same there as well. But from there to there is a 62% retracement. You see these all the way through. But anyway, the market currently just at the DP for the 30-minute FTSE. Overnight you can see the market coming off the low as well, and then demand bringing the market back to the upside. In the Japanese yen, market back up yesterday, sideways overnight. Big move back yesterday as the dollar showed some weakness in the afternoon. Otherwise, the yen was sideways all the way through the morning. And there you can see moving back to the upside. Continued overnight, had a bit of a pullback down to the DP. It's currently oversold and is now finding support and moving back. Needs to take out yesterday's high and the 200 MA in the 30-minute chart in order to move higher. And also from here to here gives you the upside targets as well for the yen. In the pound, this also down as the dollar was up, as I just said, in the afternoon of yesterday. And also you see they're trading down to 62% retracement. Golden ratio still below the 5 bar moving average, needs to be above this. And the 50 EMA, tomorrow is the Bank of England day, and Bailey is expected to raise rates by 50 basis points or 0.5%. 30-minute chart for yesterday, market sold off initially, bounced, followed the stock market back to the DP at lunchtime, and then moved lower, retraced, and then continued lower as the dollar moved higher. And overnight we still need to take out the DP, the 200 MA and the 50 EMA, which has been resistance with this market, so we could see a bit more on the downside in the pound. And finally, in the metals, silver slammed yesterday, which is no surprise. It's up on the overnight, but I'm not convinced that we're still going to see more of a retracement in this market yet. All we need is a rocky day in the stock market, and they'll use that as the excuse to slam the market down. 30-minute chart for silver, you can see we get to the 1 o'clock fix, down she goes, bounced overnight, and now heading back to the DP 50 EMA area. For this market, we'll see what happens when everything else opens, and certainly the 1 p.m. fix, because that's certainly done the business for the last couple of days. Gold also down yesterday after hitting the 78% retracement and 50 EMA, finding support at the 5 bar moving average yesterday, and up overnight, which you can see there. But again, yesterday you can see the grind down as they took advantage of this, and also you'll notice the market's already found support at the low and risen off this through the DP, and making our way back, and it's stronger than silver at the moment. So if we go from here to here, these would be the upside targets for gold if it continues throughout the trading session. Watch the 78% retracement there as it ties in with the S2 there. Not S2, the R1, isn't it? Yeah, R1. And then you got yesterday's high just there as well. Dollar recovering yesterday, coming off the 50 EMA. As you can see, they're oversold, as I mentioned yesterday. Still moving to the upside at the moment. Bit of weakness, though, at 62% retracement, which you can see there. And finally, crude oil finding support after yesterday being moved to the downside as well. OPEC meeting all day today, coming up a bit there and higher than the 5-bar moving average, coming off the fibs there as well. Okay, that will do it for this one. A bit long-winded, but a lot going on at the moment. Let's see what happens today when Pelosi tries to take off from Taiwan. Okay, that's it. As ever, thanks for watching. See you in the next one.